Silver has gone absolutely crazy in 2025 and 2026.
Silver jumping more than 6%.
For silver, nobody expected this.
People trying to get away from the US dollar to seek out other assets.
You've got every electrical component in your cars requiring silver.
Investors, as we told you at the top of the show, they came flooding back.
Queues outside ABC Bullion in Sydney. Silver has been for a long time waiting to catch up.
Now, I've been asked a number of different questions ranging from, is there really a physical shortage? How does the industry work? And what does the future of silver look like? In this video, we're going to take a deep dive into the bullion industry and hopefully answer all of your questions about silver. My name is Sam Laurie. I'm the founder and owner of Liberty Bullion. We're a bullion dealer here in Melbourne that sells physical gold, silver and platinum to the retail public. So what does that mean? Well, there's 3 stages in the supply chain before you get your bullion. First, it starts at the mine, bringing out the raw material from the depths of the earth and getting it out of the ground. Next comes the refinery. Now these guys purify what they get sent from the mines and get it into its bullion form. Next comes the bullion dealers like me. We buy from the refinery and service the public, also buying back from the public as well. Now why can't you go straight to the refinery and cut me out of the picture? 2 reasons, compliance and order size. Firstly, when dealing with refineries here in Australia, you have to be a registered bullion business. So if you don't have an AUSTRAC registration, if you're not compliant and fully set up, the refinery is not legally allowed to sell to you. Now, secondly is order size. Now, when people come into the bullion dealer, they might be buying a couple $1,000s worth, up to a couple $100,000, maybe a couple million. I buy millions and millions of dollars every month from my suppliers. Now let's segue into premiums. What is a premium? Well, it's the amount that you're going to pay over the spot price of the metal for whatever product that you're looking at buying. We have premiums that we charge to our clients, and the refineries have premiums that they charge to us. Now, in normal market conditions, we sell silver kilos at about 5% over spot price. Now, in early February of 2026, we are selling our silver kilos at between 15 to 20% over spot price. And keep in mind, that's incredibly competitive. We're one of the cheapest bullion dealers in Australia at that price. Now you might be saying, Sam, why have you increased? Almost 4 times higher on premiums, what's going on? And the answer comes down to, well, the refineries have increased them on me, and substantially. Now this comes down to 2 reasons. First of all, they're having to pay higher premiums to the miners or to the other suppliers they deal with. And secondly is volatility. Now in any market, when things get super volatile, spreads blow out. That's transaction costs, whether it be in the share market, the crypto markets, the precious metals markets or elsewhere. An increasingly volatile market carries higher spreads, and bullion is the same. Now, what kind of volatility are we talking about here? Well, this is a market that has gone from 120 to 64 US dollars an ounce in less than 2 weeks before bouncing to over 80 US dollars an ounce at the time of filming now. That is extreme volatility, and that makes it very difficult for business owners to make decisions for the future. Now, to keep their businesses afloat and to ensure that they can pay their staff, they increase their spreads. Now, the reason that the mines can charge higher premiums to the refineries is essentially that there's a global physical shortage for silver. Now, there's some people online that have expressed some doubt in whether the physical shortage is real, and you can just check the data yourself. So you can look at the London lease rates for the physical precious metals. Both silver and platinum are at sky-high lease rates at the moment. And you can also check at the difference between the price for silver in China on the Shanghai Futures Exchange versus the COMEX. There's a huge disconnect in price there. The Chinese price is much higher on a physical exchange. So that tells you that, again, there's a physical shortage. Now, this leads to another question that I get all the time. Why are premiums so much higher in Asia than over in the US? Now, the answer essentially comes down to culture. Precious metals are valued much more highly in Asian culture than in Western culture. Now, we can point to the importance of precious metals in Asian culture a few different ways. You can ask the average Chinese person whether they own physical gold. The answer is surprisingly yes. But also you can see it in their language, where the direct translation of banking in English to Mandarin Chinese is moving silver. And the direct translation of finance from English into Mandarin Chinese is the study of gold. Now, there's also a huge difference in both culture and premiums between the Australian and the US bullion markets. On my videos, I get loads of comments from US bullion investors talking about the key differences between our market and theirs, sometimes with a little bit of aggression. Now, a key topic that keeps coming up is that Australian premiums are much higher than US premiums. Now, this difference works in both directions. It works in your favor when you're buying bullion, but it works against you when you're selling it. So in Australia, when I'm buying back bullion from the public, I'll pay you 100% of spot price up to the 1 kilo size in silver. But in America, this is literally impossible. There are no dealers in America that will pay you full spot for your kilo bars of silver. Not one. Now, this difference in premiums makes it very tempting for me to open up a US bullion business. So let's see what 2026 has in offer. Now, the numbers, I can't exactly say what they are because different people have different prices and prices are changing constantly. It's a very dynamic game. But if you look back at the last month or two during silver's massive run up into 120 US an ounce and then the drop thereafter, there's stories of people going into US coin shops with their silver rounds and being offered $10 US below spot for a 1 ounce silver round. Now, a silver spot price at around 80 US an ounce, that's an over 10% difference between what you can get for your silver in America versus what you can get for it here in Australia. Now, why is this difference the way it is? It essentially comes down to market forces. Here in Australia at the bullion dealers, for every 1 seller of silver, we have about 5 buyers. In America, for every 1 buyer of silver, there's about 5 sellers. Now, this has been the case for over a year now, which has meant that the US has had persistently lower premiums than Australia for quite a while. Now, this behavior to me is fascinating, how in the US they've been selling their silver that's been going up in price and swapping it for US dollars that have been going down in value for over a year now, compared to here in Australia, where despite the Aussie dollar going up in value against the US dollar, we've been swapping our Aussie dollars for silver, which has been going up faster than the Aussie dollar. Now, let's talk about how to invest in silver in 2026. There's a few different avenues that you got open for you. First of all, you can buy physical bullion. That's the one where I've put my personal wealth in, but you can choose others. There's also ETFs, where you can get exposure to the price of gold and silver without owning the physical precious metals. The third is mining stocks. You can buy silver mining stocks or gold mining stocks, companies that mine physical gold and silver out of the ground and sell it. You can own shares in those companies. And lastly is trading futures contracts, where you can trade with leverage paper contracts on the price of gold or silver or platinum. Now, what paper contracts means is it's just a bet on whether price goes up or down. You don't own the actual metal itself, you're just betting on the price of it. Now, there are some key issues with those last 3 options, issues that I as an investor are not comfortable with. And they essentially come down to counterparty risk. You're trusting the custodian of that ETF, essentially that they're good for it, that they've bought the precious metals, that it's really there and that you can access it when the time comes. Now, there's a lot of trust there, and I just don't feel comfortable risking hundreds of thousands or millions of dollars based on that level of trust. Now, the second option, mining stocks, that has issues with it as well. Now, the issue with mining stocks is, again, counterparty risk. You have to trust this mining company. You have to trust that they don't go broke. You have to trust that they're telling you the truth about what's really in the ground. One of my favorite movies is Gold, made back in 2016, talking about the BRIEX scandal, where they threw a guy out of a helicopter in Indonesia because they were lying to all of their investors about the ore grades that they drilled at their Indonesian gold mine. Now, that BRIEX scandal, the biggest gold scandal in history, cost investors $6 billion when the company collapsed in 1997 due to fraudulent gold samples. Now, the last option there, futures contracts, have their issues as well. Now, futures contracts are derivatives, and in derivatives, it's a zero-sum game. What do I mean by that? I mean that the winner gets paid by the loser. Someone's betting on price to go up, someone's betting on price to go down, someone gets it right, someone gets it wrong. Now, the counterparty risk here comes from whether the loser can afford to pay you. Now, let's say that you're betting for the price of silver to go up and go up big. Let's say you get it right, but let's say that the guy that you've bet against can't pay you out. He doesn't have the funds for it. You got the bet right, silver went up just like you thought it would, no payout for you. that would be a very sad day indeed. Now, we've seen breakdowns in the derivatives markets before during financial crises, the GFC being the most prominent. So that's why I'm not putting my life savings into futures contracts. So hopefully this video has helped to answer all your questions about the physical silver market, what's going on in it at the moment, what's going on around the world. Feel free to reach out to us if you have any questions or if you'd like to purchase physical precious metals. That's what we're here for. We've helped our clients generate hundreds of millions of dollars in profit over the last few years, and we'd love to help you do the same. What a time to be alive.